This trade lasted 8 minutes. I was done trading at 8:52 in the morning. One trade, one setup, and I walked away. The question isn't just why it worked. The real question is why again? Because this is not the first time this exactly structure has shown up at this exactly level. Let's break down. This is PLTR on the 1 minute chart. The red line here is the high of previous day, and this other red line is another high of a previous day. The market opened down here and immediately start pushing up. Now, this is important. When price starts pushing towards a previous day's high, I'm not looking to buy into it. I'm watching how it behaves when it gets there. The price push towards the high, reject, pull back, pushed again, and reject again. And then something started to start happening here in this area. Instead of breaking above the level, price started putting in highs right underneath it. That's not strength. That's pressure built under resistance here. Now, here's where most traders get this wrong. They see a flag, they short the first flag they see. But flags form everywhere. Middle range, in random chop, after extend moves. That's not structure. What made this different? It was location. This flag formed directly under a previous day's high. Not in the middle of nowhere. Not after a breakout. Under resistance. That changed everything. Price pushed up, reject multiple times, and then began compressing. Lower highs inside this small range here. When you see compression under a key level, it usually means one or two things. Either it's going to break aggressively above, or it's going to fail and unwind fast. I don't predict, I wait. And when this flag broke lower with this red top and tail here, this was my extra signal. This top and tail told me sellers were still defending this level here. This break gave me structure confirmation. This is where I enter. When this bar was formed, I enter here. My stop was above here, and my target was down here. Simple, defined risk, no guessing, no random numbers, a structure. And here's what I want you to really understand. The reason I went bearish here wasn't just because it was a flag here. It was because the pattern was formed under this high. Location first, pattern second. That's the order. If you reverse that, if you focus on the pattern first and ignore location, you will take trades that look clean but don't have context. And context is what creates edge. This setup keeps showing up at the same type of levels. Previous highs, previous lows, major reaction points. The market remembers those areas. Liquidity sits there. Orders sit there. Emotions sit there. When price approaches those levels, behavior changes. And when a pattern forms there, that's when it becomes high probability. Not guaranteed, high probability. That's the difference. The trade lasted 8 minutes. There was no stress, no chasing, no adding, no revenge trading. Once the target hit, I was done. And this part matters more than the entry. Because discipline compounds. Overtrading destroys. The win isn't the money. The win is that I waited for a structure. The win is that I didn't short the forced push. The win is that I let price show rejection, compression, and weakness under resistance here. Then I executed and walked away. So when you see this and you ask, why again? It's because the market is not random at these levels. Patterns repeat where structure exists. If you focus on structure first, you start seeing the same setups over and over again. When you start seeing repetition, confidence increases, execution improves, emotion decreases. Tomorrow, the goal stays the same: one stock, one time frame, one clean trade. If it forms a structure, I will take it. If it doesn't, I won't. And always process over profits and discipline over dopamine. Thanks for watching.